I've already started this paper in the channel. Guys, just like I was saying to the grade 11s not long ago, the first thing that you must first highlight is who you are. For question 1, who are we? We are Patel, not Patel, not Patel. It's Patel. Okay, it's Patel Power, right? And who owns Patel Power? It is owned by Krisha Patel, owns Patel Power. This is very important because it helps you determine whether are you the one selling or are you the one buying or are you the one returning or are goods being returned to you? So they are an established business that imports. Immediately when they talk about imports, what must you think of? Transportation and custom duty. But I don't know if they have custom duty here. And what are we importing exactly? Energy components from an international manufacturer, which is Zhang Zappa. Wow. Zhang Zappa or Zhang Zappa. I don't know. The 2022-2023 scheduled load shedding has drastically increased the demand for their Wi-Fi UPS. So what is UPS? Uninterrupted power supply units. They use periodic inventory system. Guys, this is not important as such. It only tells you that cost of sales is calculated at the end of the period, not after every sale, right? And when you calculate cost of sales, you will use that formula. Opening stock plus purchases minus returns plus custom duty plus carriage on purchases. What else do I have there? I forgot others. And then you minus your closing stock, okay? And they have a fleet of 6 delivery vehicles. They are VAT registered, which is good. And they're registered on invoice basis method, meaning that you calculate VAT when you sell and when you buy, not when you receive money or when you make a payment. That's what it means. But anyway, I don't know if all of that information will be important. And then they say Patel Power values their stock using weighted average method, which is good. So a UPS unit consists of one component and is bought and sold as a single unit. That is also very important, highlighted. The stock records for the financial year ending 28th of February. Also highlight that because it's very important, as this one here. And then they gave you, these are opening stock, which is at the beginning of the year. They gave you purchases during the year and gifted unit in January 2023, as well as the closing stock. So you were given the closing stock here, which is 8,200. So you don't need to worry about calculating closing stock. It is given to you. You don't need to worry about calculating it. Then they said the following information was extracted from the stock records. They sold 42,150. That's good. We will come back to that at 595 each. 2,000 units were returned in October. They gave you the month as well. They had the European plug point. I don't know what's the difference between a South African plug point and European plug point. So we returned this back to Zhang Zappa, right? We good? Okay. And in January, Zhang Zappa gifted 1,500 units as they became a preferred customer based on their purchase history. Because we are a loyal customer, they decided to give us 1,500 units. They delivered these units free of charge, so we didn't even need to pay for carriage them. The total of 81,500 was paid for carriage on purchases during the year. On December 30th, Krisha discovered that an employee, which is Matt, had been stealing UPS units throughout the year. She subsequently dismissed the employee. The value of the loss calculated on the weighted average cost method was deemed to be of a material nature. A claim for the loss was lodged with the insurance company. Okay, I don't know if we're gonna use all of that. Guys, I read everything. I'm gonna go straight to the question. They want us to calculate weighted average of one UPS unit. How do we calculate weighted average cost? Opening plus purchases minus returns plus carriage on purchases. You also add custom duty if it's there, but we didn't have any custom duty here. And then you will divide it by the number of units, which is opening plus purchases plus gifts minus returns. We good? We good? All right. Now, guys, tell me, what is the value of your opening stock? The value of your opening stock. You're giving me units, the rent value. Let me be specific. What is the cost price of your opening stock? 975. So this will be 975. And what is purchases? 15,600,000. What is carriage on purchases? 81,500. What about returns though? Times what? Why do you times it by 425? Because these units were returned in October. What if they were returned in November? Which value were we going to take? If they were returned in November, which value were we going to take? Were we going to take 275? No. How can we return something we haven't yet bought? We were still going to take that 425. Are we all together now? Sorry? If it says January, then we're going to use December ones. Okay, so if they say November, we're going to use September. Are we all together? Can I move on? Okay. And what am I going to divide that by? What is opening units? It's 3,000. What is purchases units? It's 48,000. What is, can I have carriage on purchases units? We can't have it, okay? Instead, what am I going to add, guys? I'm going to add gifts. Did we have any gifts? Which amounted to 1,500, and then you minus your returns. Your returns, how much are they? It is 2,000. And when you find the value, it must be in rands. It will give you 313 rands, okay? 313 rands will be your weighted average cost. We normally use the weighted average cost to calculate the value of your closing stock as well as the value of your loss, okay? And this is how I allocated marks. Can I move on, guys? .2.1, what are they asking for? We need to determine the number of units that were stolen during the year. What is the process for calculating number of units stolen? No. We take their closing. Units stolen. You calculate your own closing stock, you compare to their closing stock, the one that they gave you. If the one that they gave you is less than the one that you have, you will have a, guys, we did trading stock deficit, you'll have a loss. Does it make sense? Okay, you'll have a surplus. No, you won't have a surplus, you'll have a deficit. If their closing stock is less than ours, It's a deficit. But here it's in units. I hope I'm making sense. How do we calculate closing stock? Beginning of the year plus purchases plus gifts minus returns. It'll give you units available to be sold. Okay, so all of these guys will give you units available to be sold. All of these will give you units available to be sold. Once you get that value, let's calculate it quickly. Let's calculate that value. How many units are we going to have available to be sold? 50,500. So you took 3,000. You took 3,000 plus 48,000 plus 1,500. And then you minus 2,000. So you'll have units available to be sold, which is 50,500, as you said, right? And then you subtract units sold. How many units were sold? 42,150, okay? You'll subtract units sold, which is 42,150. And this will give you a closing stock, which is 8,350. But they actually gave their own closing stock, which is 8,200. So ours is more than theirs. So what do we have? Deficit or surplus? No, it's a deficit. Yes, ours is greater than theirs. Theirs is the actual. That is the actual. It means they counted that. Okay. It's same as on hand. Thank you. So we have missing. How many units are missing here? It'll be 150. Can I move on? It's a deficit, yes, which is stolen or lost. Now they say there is a 1,200 excess charged on every claim. Calculate the rent value of the insurance payout. You first have to calculate the total insurance loss. How much will be the loss? How do we calculate the loss? Times 150, right? So it's weighted average times 150, which is the units lost. So the payout is supposed to be 46,950. Will it be 46,950? No, they are going to deduct their excess of 1,200. So we will only receive 45,750. Excess is the actual loss, okay? It is the loss that we will not get back no matter what. So we subtract that because it's a loss we will never get back. If we were preparing the income statement, we were going to write that 1,200 as a loss due to theft. May I move on? And then they ask us to complete the trading statement. You did this under manufacturing. You first have to calculate sales. How do we calculate sales? Times 595, you mean? Okay, so it'll give you 25,079,250. I love working with these numbers. And one of your test guys, I gave you big numbers. And that is because when you get to varsity, you work with millions. And think about it. A lot of companies are making millions. It doesn't make sense for you to be calculating things using thousands or hundreds of thousands, okay, or tens of thousands. I think it makes sense for them to give you guys millions. So how do we calculate cost of sales? The value of your opening stock, which is 975, and then what do we subtract from purchases? Returns. How do I get that 850,000? is 2,000 times 425. It'll give us 14,750,000. Coverage on purchases was 81,500. I need to subtract stock stolen. But when I subtract stock stolen, which value do I take? It's 150 times. Why don't I take into account the excess? Excess is not there, loss of your trading stock. Okay. But I think they would have given you a mark if you subtracted the excess, because that excess, in essence, it's a loss. It'll be included under losses. But here, it'll be included as part of your cost of sales, in essence. And then you subtract your closing stock. And when you calculate your closing stock here, it will be that 2,566,600. Yes. The closing stock, you all understand how we calculate the value of our closing stock, right? It's the number of units, the actual number of units of closing stock multiplied by your weighted average cost of closing stock. The actual number of units of closing stock times you by the weighted average cost per unit, because that's how we value our closing stock here. If it was first in, first out, it will be totally different. And this will give you a cost of sales amount of 13,192,950. And I think that's it with question 1. Did you guys do question 2? You did question 2. Sims? Why not, Sims? Okay, let's go to 1B. They gave us extract. So you will notice that this 1 million, is it at the beginning of the year or at the end of the year? It's beginning, because end of the year will be 28th of February, 2023. They also gave us accumulated depreciation at the end of the year, but it was not given at the beginning of the year. Tricky, isn't it? Then they said the following transactions relate to the vehicles for the year ended 28th February 2023. A new vehicle was purchased during the year for 390,000. Will that vehicle have accumulated depreciation? No, because it is new, but they didn't tell us when it was purchased. It's important for them to tell us when it was purchased so that we know for how long we are going to calculate depreciation. Okay, then they say an old vehicle which cost 250. First of all, that 360 will increase 1.8. And the 250 will decrease 1.8. So this vehicle was sold during the year for 120,000. Is this 120,000 important? For calculating only profits and to determine what goes into our bank account. That's the only part where it's important. And then they say the business made a profit of 38,750. Oh, now that 120 becomes very, very important. Okay, when they gave us a profit, it means that they will not give us the carrying value of this asset that was sold. And they told you that vehicles are depreciated at 15% using the cost price method. Depreciation on all vehicles sold, remaining and new, has been correctly calculated. So we don't need to calculate depreciation here because it was calculated already. Can I move on? The first question. We need to calculate the following amounts in the space provided below. Please note that the final amount must be transferred correctly to the note below. They want us to calculate the carrying value of the vehicle sold. How do we calculate it? We were given cost. Were we given accumulated depreciation? Were we given when this vehicle was sold? Did they tell us? Did they, if they give us, they don't give us accumulated depreciation, they need to tell us when it was purchased. because we will need to calculate depreciation from when it was purchased until the beginning of the year. All of that was not given to us. So meaning that we can't use cost minus accumulated depreciation to calculate carrying value. You needed to ask yourself, what's the other way for calculating carrying value? You take your selling price, which is 120. When you minus the carrying value, you're supposed to get what? Profit. But the profit was already given to you. So how would you calculate the carrying value? And then it'll give you your carrying value, which is 81,250. Can I move on? And now B, what do they want us to calculate? At the beginning of the year, right? Now tell me, guys, accumulated depreciation at the beginning of the year, clearly it was not given. What increases accumulated depreciation? Is depreciation. Was it given? Yes. What will reduce accumulated depreciation? What will reduce accumulated depreciation? It is the accumulated depreciation of the asset sold. Accumulated depreciation of the asset sold will reduce your accumulated depreciation. Are we clear then? Sims? Of the assets sold will reduce accumulated depreciation of all the assets. But were we given accumulated depreciation of the assets sold? No. Instead, what were we given? We are given cost. But that won't help us. Yes, but I want the accumulated depreciation of the assets sold. How do we calculate it? Nope. Guys, you just have to manipulate this, okay? I didn't do it here, so I'll just have to write it there for you. May I please just write it quickly? May I please just write it quickly? Guys, what was the cost of the asset sold? It was 250, right? 250,000. Were we given accumulated depreciation of this asset sold? So that will be X, because we don't have it. Were we given the carrying value of this asset sold? It was not given, but we calculated it. Do you agree? And how much did we get when we calculated it? 81,250. That is correct. Yes, I'm busy typing it here. I did not include it. You were saying? The only thing that is missing here is accumulated depreciation. Excuse me? No, accumulated depreciation of the asset sold. We don't have. Excuse me? Because the accumulated depreciation of the asset sold reduces accumulated depreciation of all assets. It's boy. Yes, but you are looking at tangible assets note. We are talking about accumulated depreciation itself. It is accumulated depreciation at the beginning of the year. plus current year depreciation, but you minus accumulated depreciation of the asset sold, okay, of which we don't have. So we had to calculate it. Yes. You need to exclude accumulated depreciation of the asset sold because that asset is gone. It's in brackets, but we don't have it, so we had to calculate it. I'll show it to you shortly. I'm done, nearly done. Okay, I'm done, guys. There we go. So we said this is for all assets, right? We don't have opening accumulated depreciation, but we have current year depreciation. Why do we show it without brackets? Normally depreciation, we show it with brackets, but here we're not calculating carrying value, we're focusing on accumulated depreciation. We need to reduce it by the accumulated depreciation of the asset sold. Was it given to us again? I'm going to ask that question again. It was not given to us. So since it was not given to us, we had to calculate it. And for us to be able to calculate it, just give me a moment. Okay, I hope everything is done properly now. Let me see. Guys, we were given cost, but we were not given accumulated depreciation of the assets sold. But we were given the carrying value. The carrying value was not given, but we had to calculate it from A. Do you still remember that? So you're going to use all of this to calculate accumulated depreciation of this asset sold. And you will get 168,750. You got it? That 168,750 will reduce our accumulated depreciation of all assets. And then you get accumulated depreciation of all assets at the end of the year, which was also given to you. It will be 1,063,500. How do you get the beginning now? You work backwards. So I'm going to take this plus that minus that. It'll give me accumulated depreciation at the beginning of the year. That's it. That question was very interesting. I thought it was easy. Guys, please go to tangible assets note, videos that I've recorded. That's why I explained everything thoroughly as well, okay? So please go back to them to make sure that you enhance your knowledge. May I move on? May I move on? Okay, cost price at the end of the year, how do we calculate it? Cost at, what do we start with? 1.8, cost at the beginning of the year. And then what do we do? Purchased. And then what do we subtract? Cost price of the sold. I like the way they did it. They broke the note number 3 up. Okay, and then it will give you 1.8 910. Okay, it'll give you now 1.910. So it's 1,910,000. Excuse me? Yes. And depreciation. Yes. So it's the same principle. If you wanted to use that table, it'll still work, okay? Please check, this question is out of how many marks? 3. Okay, let's get here, guys. What is B again? What is B? Yes. B is accumulated depreciation at the beginning of the year. You said it's 945,000. How much will be carrying value then? You said 945,000. Did they ask us to calculate carrying value at the beginning of the year? They put a star. So we must calculate it. How much is it? How did you get that 859,000? Okay, so you said it's 8. You said 855,000. Additions will be 360. What about disposals? 81250 depreciation. Or it's given to you there. So you don't need to worry about it. Cost at the end. And accumulated depreciation at the end, is it given? Carrying value at the end. How much is it? 8? 846,500. Guys, I'm taking your word for it. I did not check the memo for this, okay? I just remembered now that I haven't checked the memo. But that's what you will have. Can I move on? The periods are longer today, ne? Okay, that's it from me, guys. We'll finish it off. Please finish off question 1C and question 2. Just 1C and question 2 for tomorrow. 1C and question 2, the whole of question 2, please. Okay, that is for tomorrow. I guess I'll see you guys tomorrow.